it looks to me like something isn't working correctly. And I think the idea that it'll come back to quote unquote the normal derivatives market is less likely now than probably any time I've seen, other than the hunts when things were really crazy and the exchange basically changed the rules.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is one of the top silver experts, David Morgan from the morganreport.com. David, thank you so much for joining us today.
Well, Elijah, it's been exciting in the silver market, as you well know.
Definitely. This has been by far the busiest time in Miles Franklin's business. All 30 years, we've never had phones ringing off the hook this much. And I'd like to get your take on this, because you've said you really haven't seen anything like this since the Hunt brothers around 40 years ago. So what is your take on what's happening right now?
Well, it's awareness. I think the number one takeaway for me, and I think anyone that kind of takes time to consider it, and I don't want to tell people what to think, but the silver story is a pretty powerful story. And when I started talking about it in the early 2000s on the internet, very few people had ears to hear. And of course, over time, as silver became like the number one best performing asset a few years in a row, got noticed, especially with kind of the big money, fund managers, commodities traders, and of course, billionaires. I mean, Buffett, Gates, even Soros were involved in silver pretty early on, but the general public never really got the story. And now with this Wall Street bets that became more or less an overnight sensation with what they did with the short squeeze on GameStop, that spilled over into silver, and that made the awareness go to places it had never been before. So it's waking up to the story, really. And without that GameStop situation with the Reddit subgroup, I don't think it would have happened. I mean, I've been trying, lots of the coin dealers, everybody, but we get in an echo chamber. We get a following of, 20,000 or 100,000 or whatever, and you don't really get new ears. But now we get a lot of new ears and a lot of people that never considered silver to be a legacy investment are thinking about it, and a lot are doing it.
Now, do you think this changes anything fundamentally in the silver market?
Always. If there's any change, measurable change in supply or demand, it will have an effect sooner or later. So if there's a lot more demand on the retail side, or let's say family offices or even managed money, so let's say across the board from institutional down to retail, which it looks like this is. It's not just retail, which, is kind of my fan base, if you want to call it that. But it's big money. I mean, I verified this with some of the largest wholesalers on the planet that, yes, there's a lot of retail interest, but there's also money behind it. I'll just pause there and move on for a second. Elijah, explain that a little bit. I think it started last year, 2020, early in the year, I think January, at the World Economic Forum, commonly known as Davos, when I think it's the chief investment officer or somewhere close to that, Scott Maynard of Guggenheim, said that silver was his go-to investment for 2020, and I think he hit a grand slam, or at least hit it out of the park, hit a home run. Why? Silver was the best performing of all the metals in 2020. And when we did that interview, the Bloomberg interviewer asked him if he thought it could go like the other metals, referring to the PGMs, or particularly palladium. And Scott answered he thought so. So as you know, David Smith just wrote an article recently that pretty much went viral called, something like, "What if silver does a palladium?" And that is something that I've used in an analogy a few times in interviews over the years, that there could be what I call a natural corner or a natural squeeze. That's what happened to palladium. Palladium really isn't an investment market. Yes, there is an investment market. It's so tiny that the main price dynamics are based on industrial demand. And when the industrial demand switched from platinum and catalytic converters primarily to palladium and catalytic converters, the squeeze was on. It was a natural squeeze. So much palladium was required per vehicle, so many vehicles made, such a limited supply, the price got bid up and up and up and up until it found equilibrium around $2,200 US an ounce. And it stayed there ever since, more or less. So now, just a hot tip, I've already told, my subscribers, and I'm on an interview or two already, but I've swapped my palladium into platinum because the Platinum Guild just put out a study very recently that the auto industry is going to move back to platinum in a lot of applications, and because it's a lot cheaper than palladium, which is exactly the reason that they went from platinum to palladium. So it's kind of going back and forth like a ping pong ball, but not as fast as a ping pong game. This is years and years and years, and then back the other way.
We actually just had Maurice Jackson on the program, and he was saying exactly the same thing. How, it seems like the auto industry, should be switching back to platinum, and that just makes sense. And so it'd be bullish for platinum and bearish for palladium. So swapping it, obviously we can't give financial advice, but that seems like possibly a good play right now. Now back to the silver market. One of the things that you said was that there's actually big money moving into the silver market. It's not just the retailers. Not just people buying from the retailers. So can you expand on that? Do you think there's actually a possibility of maybe a bigger short squeeze coming in the future?
Well, it's always a possibility because it's a very thin market. And, going back just to say, repeat a little bit with more detail on what I said a moment ago, the normal offtake for the silver market on commercial bars that would be treated like a 100-ounce bar for a big investor or big retail investor. So the amount is usually in the 100 million range on an average to good year. Last year, there were over 300 million ounces of commercial bars used for investment purposes. It was actually a larger number. I won't give the exact number because it was a preliminary number produced by the Silver Institute. So I'm not pulling a number out of the air. I'm taking it right off the Silver Institute's website. So that's substantial. Now, let's say, and I said this in, I think, my January issue, that let's think or imagine that 2021 is equal to that kind of demand from, big money. What would that do to the silver price? I said it'd take it to at least $40. And it's too early to tell exactly, but what we do know for a fact is that in a short trading time frame, when this quote unquote silver squeeze started, I think it was 110 million ounces were moved into the SLV shares in a matter of like 4 or 5 trading days. Now that backed off, a lot were sold, but I think the net was over 50 million ounces. So, you don't have to take 50 million ounces more than 10 times to be at 500 million ounces, which is, 5/8 of the entire, more than half of the entire global mining supply. Now, I'm not saying it continued that direction. I'm just trying to answer the question. The question is absolutely, it looks like it could. And of course, that kind of demand has subsided somewhat, but everybody's backlogged, even the commercial bar market, because the commercial bars are carrying a premium, and they really never do. I mean, a commercial bar is your spot price. That's what the silver market is. It's 1,000-ounce bars, not a silver coin or a, industrial, or a retail 10-ounce bar or 100-ounce bar, or anything like that. It's a block of silver that's roughly 1,000 ounces of 999 fine silver stamped with a metal stamp into it, the hallmark, the actual weight, and the purity. And it's got to come from a certain refinery to be good delivery bars for either COMEX or London. That's the silver market. Those bars are now at 80 cents to $1.20, depending on where you're getting them from, above the spot price. So this baffles my mind, Elijah, and I know I may be droning on, but I think it's very important because it's never happened in my lifetime. So if you look at a price of silver, let's say on a Kitco or Miles Franklin or somewhere, and the price is 28, well, that's really not the price. That's the price for a derivative of silver. If you want to delivery, add 80 cents on top of that. So I'm kind of having a little bit of fun with this. Like, well, what is the price? Well, it's not the price you see, that's for sure. So that's where we're at. And will it last and all that? I want to be overly bullish. I've been in the silver market a long time, as anybody that's listened to me more than 2 or 3 times knows. Silver can surprise anybody. It can be very volatile, especially in times like this. And, we could see a a big move up and right back down. In fact, I'll just add on to that thought. Jeff Christian from CPN Group made a video, I think it was late last week. I don't think it was this week. And he said that, there's a lot of perhaps congestion in the market. That's my word. It's very common in the commodities market for the front month, the delivery month, which is March. And if that were to occur, you could see silver move from the current level up to 30, 32, I think was his number, and then right back down to the 28 level. I did an analysis on that last night, and the rollover situation was right on par with all the other rollovers. I know you want to ask me that question. I'm going to turn it back to you. Why don't you ask the question exactly what you want, and I'll try to be a little more explicit in my answer.
Really mentioning what you're talking about, how it looks like, a lot of contracts are standing for delivery. So how do you think contracts standing for delivery today will impact the silver market?
Yeah, this is one that I don't really do too often in the public. I'm happy to do it, and I have a lot of friends in the industry, and, I don't really want any enemies. But this idea that all we have to do is stand for delivery and look at how many people are there standing for delivery on first notice day or coming into first notice day a couple of days out. Look at all these contracts. And I don't get excited about that. I've been in this market for a very long time. And the reason I don't get excited about it is we hear that story again and again and again. And what happens is 99% of those contracts roll over into the next delivery month. So they go from March to May in this instance. And then, the next delivery month comes up and everybody's forgotten about what happened in March. So in May, it's like, look at all these contracts standing for delivery. If this happens, it's going to destroy the silver market. The COMEX will blow up. It'll be gone. No. You hear this. I'm exaggerating for effect, but you get the general idea of what I'm saying. And I know people that follow this industry have heard that or similar ideas to that all we need to do is stand strong, take delivery, and away we go. There's two things about that. Number one, I said one. That is that most of those contracts roll forward. The other one is that there are position limits the COMEX allows to be delivered, and that's only 7.5 million ounces in any delivery month. Now, to be totally objective, fair as I can possibly be, Craig Hemke has done better work on that than me because it has exceeded that several times, and Craig actually called the CME or the CFTC, I think the CME, that would be the exchange, and asked him kind of what gives. And I forget the exact answer, but it's like, yeah, well, we're not, I want to incorrectly quote him. This is just a paraphrase, but basically, yeah, that happens. And it's like, no big deal. What's very interesting about it is that position limit just is going to get doubled here in a month or two. So it's going to go from 7.5 million ounces to 15 million ounces. So there's that. And the third point, I said there were two, there's really three, is everyone that says that if we stood for delivery, that would do it, is essentially correct. I just put into the Morgan Report, which I'm finishing up, our membership site for the premium service, the paid service, that Kyle Bass wrote on a Twitter, I think it was on the 10th of February this year, that all that would have to happen is for 5% of the longs in any given month stand for delivery, and it's pretty much game over. Again, I'm paraphrasing, but that's essentially what he said in this tweet. And he also went on in that tweet to say the Hunts figured this out a long time ago. And then something I think about the subreddit group won't know what was said to the Hunts in the back room, ... or something like that. Very interesting tweet. The point being, the essence of it is, it wouldn't take too many to actually stand for delivery and cause some problems. But the problem would be what? Well, they'd say, well, wait a minute, it exceeds our delivery requirements. Everybody knows it signed the contract. We could only deliver 7.5 million ounces. So, and how they would allocate this, and I have asked this question and never got a response of, okay, if it goes to 10 million or 15 million, how does the exchange determine who gets that 7.5 million? Is it first in, first out, which would be my guess, but I never got a response.
I wanted to get back to what you were talking about earlier, how, yeah, there is so much demand. And one of the things that confuses a lot of people, for example, here at Miles Franklin, we're seeing so much demand, and really it's continued to be super, super high demand. But we haven't seen a big movement in the price. We saw that initial pop up above, $30, but then back down. And ever since then, we've seen a lot of consolidation. So why do you think this new demand we're seeing, a lot here at Miles Frankel, a lot of people who haven't stepped into silver or precious metals before are buying silver? Why isn't this impacting the spot price?
Well, I mean, that is the most important question any silver investor can ask, really. And I wish I had an absolute, this is the answer, but I don't. So I won't dance around. I'll give you as much, thinking about it as I have. And, well, surely I've thought about it as much as anyone or close to it. Number one, I think it would suggest that the system's broken. I mean, if you really analyze it in like a court of law and someone had me swear in under oath of what are we talking about, I said, well, we're talking about the derivative price of silver, which is at 28. And we're talking about honest to God silver, which is at least roughly $1 over that price. And in the fabricated market or advanced fabricated market, I mean, bars are the 1,000-ounce bars are fabricated, but in the retail fabrication process where you have government minted coins, privately minted medallions, 10-ounce bars, that is up in the 30% range for a premium. So there's the honest to God, I can have silver market, and then there's this derivative market. And so I think, to my thinking, it's starting to dawn on people, especially those perhaps new to the market, that there really is no determination of the true silver price outside of, let's say, the real retail market. And I won't advertise a crypto that I'm involved in because I just don't think it's right to do on a Miles Franklin program. But I will say that this affiliation that I have is getting a world price of silver. And I think that's kind of needed because the price of silver in the United Kingdom and Europe has got a value-added tax. So the real honest-to-God price for silver in the UK and in Europe is different than it is in North America. And it's different in Japan, and it's different in Asia. So we are going to weight the price dependent on how much purchasing is done on average, which is the only way to do you can't just average the high and low. Look at a 20% markup in Europe and normally a 7% markup in North America and average it and say that's the world price. Can't do that. You've got to look at how much is bought in each region and then weight it accordingly. But that's what's going to be done, and that will be the real silver price. And based on that price, which will be very beneficial for a digitized precious metals product, because now someone in Indonesia, someone that's in Asia, someone that's in Europe, someone that's in South America or Africa can just check with their phone what the world price of silver is. And it may be less than what it is in Europe, and it may be more than it is in North America, but at least it's a more representative price of what the bid-ask spread is in the physical market, the real physical market, not the derivative market. I hope that all made sense. I don't think it's that complicated, but I've been in the silver market a long time, and I never, ever try to talk over anyone's head. But, what I take for granted might be, a bit overwhelming for someone that's never heard anything about the silver market and doesn't know the terminology. And I apologize for that. If I left anyone out, I didn't mean to.
I think one of the things that you point out is how really the premiums, even on the 1,000-ounce bars, are, above the spot price, right? And if you get to the smaller bars and the coins, they're just so much higher, right? So we've seen this kind of thing in the past. For example, in 2008, when silver went down to $9, we still saw, I don't know, I think you probably remember, I wasn't really in the market back then, but like I've heard of like $20 silver eagles, so like double the spot price. We did see that then go back to normal. Silver went up and the premiums went down and everything like that. Do you anticipate this being a long-term issue or just kind of a short-term thing?
Well, that's the hardest question to answer because I don't want to hurt anyone. And, I actually wrote an article about arbitrage when that happened. And my article didn't make some silver bugs very happy, because I said it will come back to the silver price. It'll come back to the derivative price or the spot market price. I mean, let's face it, some metal comes off the COMEX. It's not the primary supplier, but people do stand for delivery, and they do take commercial bars off the COMEX. So I said that's what would happen, and it did. And I don't want to mislead anybody, but this time it feels different. And I'm a thinking man, but I've got emotion just like everyone else. And I try not to let emotion overwhelm me, because you are a lousy trader if you let emotions get the better of you. You've really got to be objective and say, I'm losing here. I said my loss is this percent. I'm out. I don't care what I think about silver long term or what news just came out on it. I have a loss of X percent. I'm done. So you got to be really objective trading. Coming back from the digression, I really think it could get into this bifurcated situation that we're seeing now and continue. Maybe not at the extreme price delta between retail product and derivative price, but enough to where something's got to give. I mean, there will be someone that would take advantage of the arbitrage if it lasts long enough. Let me explain. If you could take commercial bars for 80 cents over spot, and you could sell a silver medallion, a 1 ounce coin from a private mint for, let's say, $4 over, and you're $2 under everybody else, that would happen eventually. Will that happen now? No, because you have to know the market. In other words, you'd have to be pretty assured that spread would stay in place for a long time, because there's capital involved, not money, the production, the means of production. You'd have to buy, get a warehouse, you'd have to get the presses, you'd have to get, the raw stock, you'd have to have cash for that, and put together a minting process. The mints that I'm familiar with, I'm not talking about refiners, I'm talking about mints. I mean, they're on double, triple time, I shouldn't laugh, but I mean, they're doing the best they can. I mean, if you just look at the one over by me, which produces planchettes for the U.S. Mint for the Silver Eagle program, I mean, they got a pretty big shipment of silver bars, commercial bars in there very recently. What for? Pop out as many blanks as they possibly can. Why? The demand for Silver Eagles is off the charts. That's why. I would like to add on to that, because again, when silver went from, what was it, the $9 bottom all the way up to 50, so like an 8-bagger, or it was a 5-bagger, a little more. When it got to around 30, 35, and I was doing public interviews, I was cautioning everybody, if you need to buy silver, buy it, but don't buy it. Don't load the boat, don't go on leverage, don't mortgage your house, don't, any of that stuff. And I said it because I didn't want to see anyone get hurt, because it was going parabolic. I knew it wouldn't last forever. I was lucky or skilled, I'll say lucky, to call the top. But the way to get into this market, in my studied view, without too much emotion, and to also align with what I just said about this potential arbitrage opportunity, I'm not saying it's going to happen. I said it would have to carry on for quite some time for it to even really occur, would be the dollar cost average. So let's say you're going to put in $5,000 in the silver market. Instead of plunging in now, you could take $1,000 over the next 5 months, and on the first of the month, every month. Now, I always analyze things almost too much, Elijah. I mean, you've known me for years. Well, if someone might say, well, wait a minute, David, the supply is so tight that if I don't get my 5,000 in now, I might not get it. And you actually do have to think about that. I mean, I'm not trying to overhype, or paint an inaccurate picture, but this is a place in the silver market for someone that's been at it for a long time, where you didn't really experience this kind of emotional level that was only apparent to me one time before, and that was when the Hunt brothers were in the market and silver was going up limit. And I mean, I was making more money per day than I was making like per month at my job. It was just crazy. So much younger at the time, but so that's it. I mean, I'm trying to be as accurate as possible, which is the unknown. So I don't know. I'm trying to caution people. but I'm also looking at both sides of the coin as a metaphor, because if this market really seizes up, which I doubt, but if it did, then obviously you'd want to get whatever whatever you wanted, whatever's the amount that's right for you, $5,000, $500, $5, I don't know. But the safer way, more prudent way, and easier way emotionally is to go ahead and spread it out over the next few months. But I have a hunch that by the end of April to mid-May, I think we'll have a lot better and clearer picture. So that's only like 6 weeks out from now. If we get that spike to 32, 33, it comes down and, the derivatives market gets back in control and it's sort of like business as usual. That'll be one thing, but that's not what we're seeing. We're seeing indications it's going the other direction because the SLV was changed its prospectus. The SIVR changed its prospectus. There's congestion in spot month commercial bars. So again, just to, what side of the fence am I on? I want to be clear. It looks to me like something isn't working correctly. And I think the idea that it'll come back to quote unquote, the normal derivatives market is less likely now than probably any time I've seen, other than the hunts when things were really crazy and the exchange basically changed the rules.
All right. Well, it'll definitely be interesting to continue to track this. Well, David Morgan, we really appreciate your time and all the wisdom that you have to share with us. Any last thoughts before we let you go, and where can people find you online?
Yeah, just go to the main website, themorganreport.com, and be sure to look at the blog probably once, twice, 3 times a week. If you're on the free email list, every interview that I do this public domain, I'll send it to you. And I also write articles about 2 or 3 times a month. Now I've started that again, so you get those as well. So a lot of information for free if you're inclined to get deeper involved, and there is a subscription tab you can look at on the site.
David, thank you so much for your time. God bless and keep warm there.
Thank you.